All right, let's turn away from stocks and the vaccine and get to, on your screens, Bitcoin. 22,700 as we speak. David Nicholas is with us. All right, David, you deal with retail investors. Do you recommend your investors that they buy Bitcoin?
You know, Stuart, I do. And I always say you want to take it in moderation. I like 3 to 4% of liquid investable assets in something like Bitcoin. So if you really look at Bitcoin, I mean, the reason it's doing so well is it's being viewed as a credible alternative to fiat currency. And what excites me the most is really the institutions that are getting involved. If you look at a company like MassMutual, pretty boring insurer, right? They just took $100 million of their general account this month, bought Bitcoin. PayPal's accepting Bitcoin, Square's using it. So I do like it as an asset class, but it's not for the faint of heart. Since 2016, we've seen 10 or more declines of 20%, 7 or more declines of 30%, and 4 declines of 50% or more. So I am very long-term bullish on Bitcoin, but we could see some short-term pressure just given how well the price has done in the last few weeks.
Well, I'm going to come back at you. Have you recommended Bitcoin at $20,000 to $22,000 per coin to your investors now?
I have in the past, yes, but I will say we've had some clients that have had some weak hands that when the price dropped significantly, they wanted to get out. But right now, I am telling my clients, even though it's up above 22, 23,000, you want a dollar cost average in. You're not going to be able to time it. So buy some today, forget about it. Next month, buy some more. 6 months from now, buy some more because long term is going to do well. But Stuart, right now, I'm telling my clients 3 to 4% of your investments, it's a good time to get in.
And if you tell any of them to sell their Bitcoins now at a profit, you better tell them that they've got to report it to the IRS for capital gains purposes. Okay, just remember that one. Next case.
That's true.
The Bitcoin explosion, the fever over SPACs, IPOs, straight up. Do you feel this is a bit like 1999?
Well, Stuart, I always ask myself, well, why? Where is this coming from? It's coming from, there's liquidity in the market right now. We've got $3 trillion in stimulus that was already passed this year, possibly another trillion. So this money has got to go somewhere. A lot of it's coming into the market. Here's why I think it's different from 99. A lot of these companies that are going public, they've been established for many years. Look at a company like Palantir, many years of revenues, balance sheets, successful earnings. So these aren't just brand new unicorn companies that are now going public. So I think the balance sheets are stronger. They may not all be running a profit, but I do think they're coming in with much stronger footing than they were for companies that were coming out in 98, 99. No real earnings, nothing to show. So I think this is much different from 99.
Got it. David Nicholas, thanks for joining us. We'll see you again real soon.